Hello and welcome back to Crypto Saving Experts, where we talk about the latest cryptocurrency news and take a look at the markets so that we all know exactly what is happening. My name is Jess and we do these live streams every single weekday. Thank you very much to everybody who's already said good morning in the live chat this morning. We have a lot to discuss today. There's a lot of validation around the cryptocurrency community happening right now in the news. We're seeing regulators and governments coming together to try and understand how cryptocurrency and blockchain will affect the traditional systems. We are seeing that validate the space a little bit, and that's something we really need to see, especially in a bear market as well. That just gives us that little bit of confidence that there's definitely more to come from this industry for those that are starting to doubt it a little bit. Let's talk about what's going on with the price of Bitcoin first, and then we'll get on to that, and we'll be talking about the spot Bitcoin ETFs. We'll be talking about stablecoin regulation. Lots of good stuff today. So first of all, the reason I've got a smile on my face is because Bitcoin has moved over 0.05% for the first time in days. Every single day we come on here and we do these live streams, and the update keeps being Bitcoin's not moved, Ethereum's not moved. But today we have seen a little bit of movement. So in the last 24 hours, we've seen Bitcoin rise by 2.2%, all the way up to $29,800. And we have Ethereum rising 1.7% to $1,860 there as well. So we will be analysing the price of Bitcoin at the end of today's stream. We have seen a bounce of that level of support we've been looking at on the channel, but is this enough? That's the question I'm asking here. It wasn't too strong of a bounce from that level of support. I want to discuss that a little bit further, so make sure to stay tuned until the very end. Checking in with the chat. Good morning, Jason, or good evening since you're in Australia. Good morning, Monkey Nuts and Raina Lee. Thank you very much for tuning in as always. Let's see what's in store today. First of all, let's talk about these spot Bitcoin ETFs, the good stuff here. So a spot Bitcoin ETF may be launched before February. So Mike Novogratz stated that he believes a spot Bitcoin ETF may receive SEC approval before February 2024. Now, this is there's a nice run up here to the Bitcoin halving. So Bitcoin halving is predicted to be in April 2024, the 26th to be exact. And the Bitcoin halving typically triggers a bull market. That's what we've seen in the past anyway. So that's why a lot of people are excited for that Bitcoin halving and seeing the possibility that we could get these BlackRock and other institutional spot Bitcoin ETFs accepted by the SEC just before that Bitcoin halving shows that they could be the trigger for the next bull market. So let's see what's going on here. Mike Novogratz, who is the CEO of Galaxy Digital, has said that he believes we could see the spot Bitcoin ETFs being accepted within the next 4 to 6 months. So let's take a look at this. He said it's a matter of when rather than if, with an estimated time frame of around 6 months. And this news comes after Galaxy Digital reported a net loss of $46 million. So let's take a look at this. Galaxy Digital, led by Novogratz, has applied for a spot Bitcoin ETF alongside Invesco, the fourth largest ETF issuer, with $1.5 trillion in assets under management. Now, although Novogratz refrained from speculating on the ETF's approval timeline, he anticipates fierce competition for market dominance among spot Bitcoin ETF issuers. So he's looking at this saying there's a huge amount of applications for spot Bitcoin ETFs right now, and we expect that these are going to be accepted and there's going to be competition in the markets, right? So right now, there's no spot Bitcoin ETFs in the UK. And now, in 6 months' time, he's saying, look, there's going to be competition there. There's not just going to be one that can take the limelight. We're going to see a huge amount of competition in the space. So he's expecting a huge amount of these ETFs to be accepted. Now, we already know that BlackRock, Fidelity, and many other major institutions have made these applications. We know that BlackRock have filed for over 500 ETFs before, with only one of those being rejected. And we know that there's been 33 spot Bitcoin ETF applications prior to this wave of applications, and all of those have been rejected. So a lot of people are speculating right now that these are going to be accepted. I am on the team that believe we are going to see these accepted, and we are going to see these trigger a nice move to the upside for Bitcoin. But we just have to wait and see. We've got some time here, and this is what I keep saying here on the channel. We have another 9 months until the Bitcoin halving, and we have this time period now where we're still waiting to see if these spot Bitcoin ETFs are accepted. Now, I believe we've got a upper limit on the price of Bitcoin and a lower limit on the price of Bitcoin, just because of how the price has moved in the last couple of months. So when I'm looking at this now, we have a huge time frame where we could just see some sideways action until some triggers like this do occur. Now, if the spot Bitcoin ETFs do get accepted, I'm expecting volatility in Bitcoin, and I'm expecting that to be bullish. And then if we see the Bitcoin, well, when we see the Bitcoin halving in April 2024, which occurs every 210,000 blocks, historically, that's caused a nice move to the upside. So do I think these massive institutions that are filing for spot Bitcoin ETFs are trying to get in ahead of the next wave to the upside? Absolutely. So that's what we're looking at right now. I would say the same about PayPal as well, with their stablecoin that they've launched. Trying to get into the space during these bearish periods is one of the best things to do. This is what we all say in the markets. Every single bear market, we say the bear market is for learning, the bear market is for building. This is the time we need to push the hardest, invest and learn, and then when the next bull market comes, we reap all of those rewards. Now, we try and echo that within the cryptocurrency community, but it seems the institutions have been listening to that the whole time. They've understood the plan, and they've been getting in and learning and building in this bear market. And I believe these institutions are trying to get their foot in the door prior to that next bull run. So let's see what goes on there. Lee says, can you say happy birthday to Mrs. Rachel? Happy birthday, Mrs. Rachel. I hope you have a lovely day. It's a nice and sunny day here where I am, so I hope it is the same for you. Good morning, Maggie. Good morning, Jerome. Thank you very much for tuning in. As always, we have another article here on spot Bitcoin ETFs. So let's pull that up and see what else is happening here in the market. What a busy day. It's quite sunny where I am today, and it's very nice. Let's see what's going on here. We've got the SEC will approve several spot Bitcoin ETFs at once, according to Cathie Woods. So this is Cathie Woods from ARK Investments. She has said that the SEC will approve multiple spot Bitcoin ETFs simultaneously. Such a scenario would be the least path of resistance for the regulator. So ARK Investments founder, CEO and CIO believes the US SEC will likely approve several spot Bitcoin ETFs at once. Now, we have seen, I believe it was Grayscale, saying that this is the path that they wanted the SEC to take. They wanted Grayscale wanted the SEC to approve them all at once because they didn't want any disadvantages there. What we're going to see here is if all these spot Bitcoin ETFs get accepted, we're going to see a huge amount of competition in the space then. And companies like Grayscale have been fighting to become an ETF for a very, very long time. So Grayscale is saying, look, we don't want you to accept BlackRock and Fidelity first and let all those traditional institutions get ahead in the game. We've been here for the long run trying to get these ETF approved. So the best thing the SEC can do for us is just accept them all at once. And then we all have that first mover advantage. So this is what Cathie Woods is saying she believes could actually happen here. So I think the SEC, she said, I think the SEC, if it's going to approve a Bitcoin ETF, will approve more than one at once. Now, Woods' comments are a complete 180-degree turn from her comments in June, in which she forecast that ARK Investment would be the first to likely get a spot Bitcoin ETF approved by the SEC, ahead of their industry heavyweights such as BlackRock and Fidelity. Now, the SEC's least path of resistance is an approval of all spot Bitcoin ETFs. So, however, her change of tune echoes the general logic in the financial industry that the SEC will likely opt to approve several or all spot Bitcoin ETF applications to avoid the complications of showing favoritism by picking one or a few to rubber stamp and leaving out the rest. So Bloomberg Intelligence's ETF analyst added that approving all ETFs seemed like the path of least resistance given the likelihood of Grayscale winning its lawsuit against the SEC and having its Bitcoin trust turned into a spot ETF. Now, Grayscale believe all Bitcoin ETFs should be approved at once. That is what I've just mentioned there in the chat. But what we're saying here is if they all get accepted at once, we're going to see some crazy volatility here in the markets. This is something, the spot Bitcoin ETFs are something that we've been trying to get in the space for a very long time. You can see Grayscale have been working hard to get an ETF for years now. They haven't been accepted, but if these get accepted, it could cause a huge amount of adoption for the cryptocurrency space. And I think this is being overlooked a little more than it should. I know there's some analysts in companies like JP Morgan that believe that these ETFs won't won't create so much movement for Bitcoin. But I think overall, the sentiment will change for Bitcoin. People will see that institutions are learning and getting into the space, and they will want to do their research and get involved as well. And we're seeing those investors that just copy and follow the same paths as those institutions. We're also going to see those people that want to invest in crypto but don't want to spend their time learning about crypto, having the opportunity to get exposure to the space through those ETFs as well. So I think this is a really good thing for the space. And if you also take a look at the chart of gold before and after an ETF was approved, you can see the amount of adoption it got after the ETF launched. So that's historically, it has shown a win for the asset. So I'm very excited to see how this comes. But let's continue on to the next story and see what else is going on. Let's move away from the Bitcoin ETFs right now, and let's move on to the stable coins and the regulation around them. Now, we all should know by now that PayPal did launch a stablecoin, PYUSD. They're saying this is the most regulated stablecoin out there. It's in partnership with Paxos, who used to partner with Binance for BUSD until February this year. That all kind of came to a halt. But what we're seeing here is PayPal have stepped into the space in a really, really smart way. So we're seeing stablecoins get a huge amount of attention from regulators right now. We've seen, obviously, USD peg from the dollar in May 2022. And what we're seeing now is we're trying to regulate these stablecoins. Now, stablecoins that are algorithmic stablecoins, these are backed one-to-one, and these are centralized assets. Now, they're centralized assets that need regulating. Both you and me, want to know that when we buy one USDT, it's pegged one-to-one with the dollar, and that we can redeem a dollar for our USDT at any point in time. Now, this is a centralized company that needs regulating, and we've seen this over and over again. The regulators are trying to get their brains around this and work out how they can regulate these assets in the correct way. And we are still seeing the problems around that and seeing the regulators trying to organize themselves to prepare to regulate these companies. But what PayPal have managed to do is get that regulation and just drop it into the industry right when we need it. So I think this is a really powerful move from PayPal, and this is a way that traditional financial institutions will be able to get into the cryptocurrency space and actually gain that market dominance. Because a lot of people in crypto think it's too late for TradFi to really get a hold of cryptocurrency now. They're going to all fall behind. It's going to be a big problem. And TradFi are looking at this going, we don't want to fall behind. How can we catch up? How can we get involved? Now, by dropping a fully regulated stablecoin into the markets at this point in time is a really smart move from PayPal. So we'll see how this plays out, but I'm pretty interested in this right now because this is the wave that we've all been waiting for. We've been waiting for institutions to get in this space. We've been waiting to see how TradFi really react when they realize how big the cryptocurrency community is growing, and now we're seeing them react in really smart ways, and ways that you can see they've been developing behind the scenes for a very long time. Let's see what's going on in this article here, though. So stablecoin regulation powers to be given to the Bank of England. So the UK is actually considering giving the Bank of England more power in regulating stablecoins. So let's take a look at this quickly. The UK government is considering shifting power in favour of the Bank of England over the FCA, the Financial Conduct Authority. So last year, the British government initiated a consultation titled Payments, Regulation and Systematic Parameters. So what we're basically saying in this article is that we are going to see the steps for overseeing systematically important stablecoins, with the primary focus being joint supervision by the Bank of England and the FCA. So the Bank of England will have the authority to block the FCA's actions related to stablecoin providers, but they will be working together there. And the document indicates that most respondents agree on giving the Bank of England a leading role in overseeing future recognised payment entities. However, some respondents sought clarity on the extent of this authority. So we're seeing changes here in terms of stablecoin regulation in the UK, and we're seeing similar moves in the US as well. Now let me find the article that I was looking at. I've just deleted it, I think. So here we go. The US Fed provides clarity to banks engaging in crypto and stablecoin activities. And like I was just saying, it seems like this has all just come at once here. So let's take a look at this quickly. Before we do, please don't forget to like and subscribe and hit that bell notification button so you don't miss the latest cryptocurrency news. As we all know now, we do these live streams every single weekday, so make sure to stay tuned here. Let's see what's going on in the chat. It's very active today. Thank you very much for everybody who is chatting along in the live chat. It helps us always keep the streams going. Let's see what's going on here. So the US Fed provides clarity to banks engaging in crypto and stablecoin activities. So the US Fed has established a supervisory program for member banks engaging in crypto and blockchain technologies. And the central bank has also provided guidelines for banks seeking to engage in stablecoin activities. So although the US can't give clarity to the cryptocurrency space, they can give clarity to the banks on how they can operate with cryptocurrency. Let's take a look at this. The Naval Activities Supervision Program, the US Fed, aims to minimize the risks involved in the adoption of new technologies by its member banks. So what's going to happen here essentially is the program will incorporate insights and analysis from real-time data, market monitoring, horizontal exams, and proactive, intentional, and regular information exchange across portfolios, federal bank regulation, agencies and other stakeholders. So, firstly, banks seeking to issue, hold, or transact in stablecoins must demonstrate to the US Fed supervisors that the bank has control in place to conduct the activity in a safe and sound manner. Secondly, any member bank that wants to engage in the same stablecoin activities, including testing their use cases, must notify its lead supervisory point of contact at the Federal Reserve of the bank's intention to engage in the proposed activity and should include a description of the proposed activity. Thirdly, for member banks to receive a non-objection from the US Fed regarding any stablecoin activities, they must demonstrate that they have put in place necessary risk management procedures that include adequate systems to identify, measure, monitor, and control the risks of its activities and the ability to do so on an ongoing basis. So there's 3 steps there. But what we can see is they are pushing for clarity on this, and they're trying to organize this in a way that the cryptocurrency community can still grow. And this is something that we've been making out for. So this is a positive move here, I would say, from the US Fed. There is still a lot of negativity around cryptocurrency regulation in the US, but at least we're seeing some clarity on how the banks can start engaging in stablecoins and cryptocurrencies and continue to operate. Because the problems that we are seeing all around the world is that the banks actually may want to work with cryptocurrency companies, but the banks have their own regulation by which they need to stand by. So by the US giving them clarity on how they can follow the regulation they already have and continue to work or start working with cryptocurrency communities is really, really important and will allow some growth. Let's take a look at what's happening here. Please don't forget to like, subscribe, and hit the bell notification button so you don't miss the latest crypto news. Let's see what else is going on here. So we've already done this article. Let's move on to non-stable coin talk and see what else is going on. So Huobi to list PayPal's PYUSD stablecoin. Obviously, we are going to see this more and more. I think PYUSD is launching on the Ethereum network. You can move it to external wallets. You can interact with DeFi. PayPal have just dropped this, and this is going to be really interesting to see how much more market dominance this token can claim from the stablecoin sector. Let's take a look at the next story here. So, tomorrow we have the US CPI data. Really interesting one here. So, expect some volatility in the markets tomorrow day actually, 1:30 BST time. So, what time is that? That is 1:30 BST time is, let me pull that up, 13:30 BST to UST. So that is UTC is what I'm looking at, UST. What we are looking at is 12:30 UTC time, so midday UTC time tomorrow. We're going to see some volatility in the markets. We'll probably see that volatility linger for around half an hour. So let's take a look at this and the predictions within this article. CPI is the measurement tool of inflation within each country. Let's actually pull up US inflation data and see what comes up here. So let's get this into the chat here. We are looking at this here. So we can see, no, this isn't the one we wanted. We want maybe Fred, is that the one? Is that the one we're looking for? Here we go. So we can see inflation data in the US. This isn't the one I wanted either. Let me pull this out and find the one I wanted. While I'm looking for this, please don't forget to like and subscribe and hit the bell notification button so you don't miss the latest crypto news. Let's see if we can find this. This is what I wanted to find. US inflation data chart announcements. Let's see if we can find that. So here we go. This is the one we want. US inflation data, let's see over the years. So if we go to 1 year here, or 5 years, that's better. We can see we had a high of 9.1% in June 2022, and we are now seeing inflation drop over in the US. If we go to the yearly chart, you can see we've had a strong decline here for quite a long period of time. I mean, there's consistent new lows in the US in terms of inflation, with June 2023 showing an inflation rate of 3% year on year. Now, we are going to have another announcement tomorrow, which will show the inflation data for July to July year on year, so July 2022 to July 2023. Now you can see here previously for the last month it was 3%. The consensus is actually that this is going to increase slightly. So you can see here the consensus is 3.3%. But let's see what we've got in this article. Let's see what the team have been saying in this article. So the headline CPI is forecast to come in at 3.3%, which would see an uptick from June's 3% report. Now, like I've just said, we've seen consistent lows for a year now, and this could be the first increase in inflation that we are seeing on the CPI data. So after such a successful battle against inflation, the Fed wants to see the figure consistently remain low and steadily diminish to its 2% target. So the US Fed have had a target of 2% inflation since those highs up at 9.1%, and they've said this is going to take time. Although we have had a massive decline in inflation here in that CPI data, they've said they're expecting to still see these problems a year from now. In the end of next year, they're still expecting to see these problems. Now, we are expecting an uptick slightly to 3.3%, but what effect is this going to have? Let's take a look here. A slight uptick is unlikely to worry the Fed because the forecast is higher than the previous data, but it will be keen not to see it make a U-turn. If inflation begins to rise again and comes in much higher than estimated, for example, 4% or above, it may cause the Fed to continue its policy on rate hikes. Now, the importance of inflation data on Bitcoin and the cryptocurrency system and stock market is because if the inflation data is high, the Fed will look to increase interest rates once more. And when they do that, that is something the markets do not like. The stock market does not like it. The cryptocurrency market does not like it. Nobody likes high interest rates at the end of the day. Higher interest rates mean that people like you and me are spending more money on interest when we take out a loan for our business or a mortgage. And when that happens, people have less money to spend on risky assets like cryptocurrency, like Bitcoin, and like the stock market. So the market seems to take a bit of a tumble if interest rates continue to rise over and over again. Now, we all know that interest rates are incredibly high all over the world right now, and that is causing a lot of problems. When we see lower inflation data, it is creating some positivity because it's showing that the Fed has some reason to maybe pause those interest rate hikes or even reduce the rate of interest around the world or in their regions. But right now, we are seeing concerns that we are going to see an increase in inflation data. And as this article says, if that continues, if we get to 4% or even higher, we could expect some steep interest rate hikes there. So we just need to be aware of this and be cautious around this topic. We will be finding out the truth tomorrow. Obviously, forecasts aren't always 100% accurate, but for the majority of times, they are pretty consistent with the truth. Let's see what's going on here. So the Fed's next move. There are 2 CPI releases before the Fed's next FOMC meeting where it makes an interest rate decision. The first is on the 10th of August, which is tomorrow, and the second is on the 13th of September before the Fed next meets on the 20th of September. Therefore, there are 2 attempts to sway the Fed into pausing before its next meeting if inflation remains low. On the other hand, an uptick in inflation may see the Fed continue hiking rates until it reaches its terminal rate and its chair, Jerome Powell, is satisfied with the job it has done. So Powell has remained focused on the Fed completing its task and has consistently shrugged off questions regarding a pause, as he does not want to pause without sufficient evidence. So what we're saying here is it is an 87.5% probability right now that we are going to see that interest rate, that inflation rate increase. So let's take a look at this. It is also not solely headline CPI that the Fed monitors to come into its decision. Core CPI, job reports, and other economic data intertwine and can allude to economic strength or weaknesses that aid the Fed. So the rate decision probabilities, as you can see here, are very much in favor of a rise right now. So let's take a look at, they're very much in favor of 5.25 to 5.5. Let's take a look at this. In the days leading up to the CPI release, the market is heavily anticipated no rate change by the Fed in September. This does not mean a pause, only that the Fed leaves rates as they are, which also occurred in June. But let's see how this plays out. This is something we need to be aware of. This is going to be tomorrow. In fact, we'll probably push tomorrow's stream back till 1 p.m. BST time, let's say, and then we can do the half-hour run up until that announcement. And then on that announcement, we can watch the volatility of Bitcoin together. Let's do that. That's usually a pretty fun stream. Let's see what else is going on in the cryptocurrency markets. But if you want to tune into that, make sure to like, subscribe, and hit that bell notification button. And tune back in at midday tomorrow, UST time. Is that what it is? UTC time. I keep getting that mixed up today. UTC time, midday tomorrow. Tune in and we'll watch that CPI data announcement together. We'll watch the price of Bitcoin be as volatile as ever. And we'll have some fun. Let's see what else is going in the news. We've got 2 articles left today, and then we'll analyze the price of Bitcoin. So here we have Bitstamp to expand operations amid fundraiser. So Bitstamp is attempting to raise the acquired funds to expand globally and offer more services. So, it was founded in 2011 and is the world's oldest cryptocurrency exchange. It was launched just a year before Bitfinex and Coinbase and has seen the hurdles over the years faced by cryptocurrency and has lasted through each of them. So, according to the report, they've begun the process of raising funds in June with the help of Galaxy Digital, and they're seeking to raise funds to aid its services in reaching more countries across the globe. If you are interested in that, make sure to head over to cryptosavingexpert.com. We have one last article today, and then I'll read some of these questions in the chat. What we have here is Binance receives regulatory nod to offer crypto services in El Salvador. So they are now the first fully regulated and operational cryptocurrency exchange in El Salvador, the country that made Bitcoin legal tender. So we're seeing some developments there. I'll drop the link to this article in today's chat. Let's move on to the price of Bitcoin. Let's analyze Bitcoin and see what's going on there. Let me first read through this chat and see what's going on here. So, Jerome says, I feel like Bitcoin is about to pump. Is it about to pump? Let's take a look at that. Let's go on to Bitcoin analysis here. Let's see what's going on. What else is being said in the chat? Please don't forget to like and subscribe and hit the bell notification button. So let's see what's going on here. Lee says we need XTP news. I've got no XTP news today, but I'm sure Jordan does. Make sure to stay tuned on that Martini Guys channel and he'll be able to keep you updated on that. Lee Scully, we are supposed to be listening to Jess, not playing copy the emoji. I've been seeing those emojis fly up in the corner of my stream. I enjoy it. Thank you very much for all the emojis and thank you very much for all of the likes. Let's see what else is going on here. So, on the daily chart, you can see that we have a level of support here. Now, I want to pull this out a little bit more. You can see I've taken the wick of the daily chart on the 30th of December, the wick of the daily chart, the daily candle on the 10th of March, and then I've taken the bodies of these candles on June 14th and 15th. You can see here, we wicked this level of support exactly just 2 days ago, and then we have seen a nice big green candle yesterday. But does that mean this support is strong and is going to hold? I think right now, for us to hold this support for the next couple of weeks, we need some bullish news. The volatility in the cryptocurrency markets is very, very small right now. The markets are not moving as much as they usually do, and we need some volatility in order to hold those levels of support. So I'm looking at this, and yes, it looks positive right now. Yes, we have seen a bounce from that level of support, but unless we see some positive news breaking into the markets, it's not good. It's not looking too secure. Now, if we take a look at the 4-hour chart, in fact, let's go back to the daily chart quickly. You can see we have a level of support here that we've used here over and over again. And if we pull out, in fact, let's delete this and we put these horizontal lines on here. So you can see here that we have a level of previous support that has actually been used as a resistance once again. We also have this point here. If we manage to have a daily candle close above the $30,000 level, I would say then maybe we're in for another retest of that $32,000 level, but I just don't see it right now. With the lack of volatility, I'm expecting more sideways action. I'm expecting here we see some more movements in this direction for the next couple of days. So unfortunately, I'm not feeling super bullish or super bearish like you guys all want me to be. I am feeling like there is more sideways action in store, but throughout these periods of time, I'm accumulating all of the time Obviously, nothing is financial advice, but I like to accumulate at these levels. We're sub $30,000. Do I think we're going to be down here forever? No. Could we go lower? Could we go down to $25,000? Potentially. But will I kick myself for buying at $29,000 instead? Absolutely not. So this is the time where I'm taking advantage of the markets. I do believe we are in for more sideways action. We haven't yet reclaimed any major levels of resistance within this move to the upside currently, although it's been a nice move to the upside. We haven't seen any major changes in terms of the analysis of the supports and resistance and what have you. Overall, it's just nice to see the markets move in some way. So it's not that bad. Let's move on. I think that is all we have for today's stream. So thank you very much for tuning in. As always, please don't forget to like and subscribe and hit the bell notification button. Also, to help us with the stream, please don't forget to share them with your friends. Help us as much as possible to grow this channel. We have been doing these live streams every single day now. These live streams began in December last year. So it's been around 9 months of these live streams. Oh, maybe it was November last year. 9 months of these live streams every single weekday. We have never missed a day, and we do not plan to. So help us grow these live streams and the channel as much as possible. Let's try and get to 100,000 subscribers. Thank you very much.